Hi there. This is the story of SMCI, Super Microcomputer. Right now the market cap is about $44 billion and the price about $58. Now, the most important thing is whether this company is a great investment for the current price. And the answer, you will find it in this box. During this video, I'll open the box and you'll find the answer here. And to understand that answer, you have to look at this business and especially their growth rate, because all it matters for this company is their future growth rate. As you probably know, this company has earnings. It's a profitable business. Revenue has increased quite nice over the last 3 years, from 5 billion to 7 billion to 14 billion, and they expect to double their revenue, even more in the future. Their earnings from 200 million to 600, and then to over 1.1 billion. Quite a nice increase. And dilution, number of shares, just a small increase. 500 million, 560, and 600 million. As you probably know, most of their revenue comes from hardware sales, 70%, and software sales, 15%. And guess what they sell? Hardware for data centers, especially AI servers combined with NVIDIA GPUs and liquid cooling systems. And for software, they offer the server management for those data centers. It's the AI market. Total addressable market is about 500 billion and is expected to increase more in the future. There is huge potential for SMCI. 500 billion, revenue close to 15 billion. So there is huge potential for this company. Now, if you look at their guidance for 2025, they expect the revenue to go to around 20 billion, 21 billion. And the earnings to be about, adjusted earnings, to be about 1.3 billion. So an increase from 1.1 billion to 1.3 billion, and from 15 billion to 20 billion revenue. Then for 2026, the revenue, here there are different estimates, to be about 40 billion or 30 billion, depending on the demand. And the earnings will increase to be around 1.4 billion to 2 billion. What does it mean? Well, here you can have two scenarios. You can have more scenarios, but those are the two scenarios. If, let's say, the best case scenario, they report 2 billion in 2026, and the revenue is expected to increase even more from 40 or 40 billion in 2027, 2028, then the market cap can go to over 40 billion from this level in 2026. Now, if they report 1.4 billion, and again, the revenue is expected to increase more in the future, the market cap may be around this level, 44 billion. Of course, if the growth rate goes higher than 15%, you can have even more, 60 billion, or 45 billion. So the range is between 40, 60 billion. You have this range, the valuation that SMCI can reach. Now, if you have other tailwinds, big news out there, another big demand, of course you can make more than this. But let's be realistic and have an ace up your sleeve. This is the time when you want to invest, right? Now, you also have to understand that the return you've seen in the past for SMCI, quite a nice return, won't happen in the future. Your return will be lower because of the size. The market cap has reached quite a large size. So going forward, your return may be about 8 to 10% a year. Don't expect another, 3x, 4x from this investment. That won't happen because of their size. They can grow like crazy every year. And the valuation that this company can reach in the next 2 years, 2025, 2026, is around this range. 34, 40, or 60 billion. Now, to make a profit with this company, you have to buy at the low range, right? 34 billion or 40 billion. And especially when you have a margin of safety. What does it mean? You buy below 40 billion. Can be a margin of safety of 10%, 20%. I mean, to have a discount of 10%, 20%, 40%, the higher the better for you. I mean, because your return can get higher and higher, the higher the margin of safety is. So if you can catch this company to invest in SMCI when the market cap goes below 40 billion, and that happened in the past, this year, if you can invest in this company at that level, you are likely to make money. Now, your return, of course, if you buy below 40 billion, your return may be a double, so 2x in the next 2 years, or less than that, 50%, but still good in 2 years to have 50% return on investment. That's a great achievement, because you have low risk and a nice return. Depending on the market, you may have an increase of 50% or a double. The market cap to go to 60 billion if you buy below 40. So the idea is to buy with a margin of safety and in the low range. You try to value this company based on what will happen. And then you get in, only in, as I said, you have an ace up your sleeve. This ace means a margin of safety, future growth potential, buybacks. For the moment, they haven't announced any buybacks, but for the moment, you have this ace up your sleeve, margin of safety. And try to invest in this company when you have the market cap around 40 billion or below. If it gets lower and lower, the better for you, because your return will be higher than 8 to 10% a year. If you buy right now, there is no doubt you will continue to make money, because if you look at the demand for AI, it's still there. This company continue to grow and they will report higher revenue and profits in the future. But your return won't be that high. I mean, you might get at the current price an return about 8 to 10% in the next 2 years. I mean, 8% maybe this year and 10% next year. And by the way, this is the return from their business. Now, if you have other great news out there in the market, of course, your return can be even higher. The market cap can double from this level if you are lucky. But you don't need luck. I mean, don't ever rely on luck. You rely on the business, that the business will improve, will deliver more earnings in the future and revenue, and invest in margin of safety. And if you do that, for sure, you'll make money in the long term and a much higher return. So to open the box and tell you whether this company is a great investment right now, for me, be aware of the word that I say, great investment, not a good investment, or average. Great investment. For me, it's not a great investment. It's not a great investment at the current price, as I said. Because to be great, this company has to be better, a better investment than my companies from my portfolio. And those companies, businesses in my portfolio are much, much better than SMCI. I have a margin of safety, and your return, my return is higher than 8 to 10% a year. And by the way, if you are interested in them, you can go to my profile, press join, and choose Titan Investor. And besides my portfolio, you also have access to my investing course, other in-depth analysis, and bonus stock prediction challenge. If you can predict the stock price, the increase in the stock price of SMCI in the next 40 days, for instance, I predict SMCI will increase by 40% in 40 days. If your prediction comes true, you get all my money from all members on this subscription. via gift card. So this is a great deal for you. Not only great access to great investment ideas, but also the possibility to earn all my money from my subscription. So it's up to you if you want to have great returns and stop losing money with other companies. And if you have other questions, please let me know in the comments.